Hello, everyone. Good afternoon, good evening. How is everyone doing today? Are you guys okay? Can you just please confirm if you can hear me? Oh, good. Hi, Julianne, Kenneth, Sarkar. I can read some, Brian, some familiar names also from the morning briefings I'm presenting. It's nice to see your names here, guys. It means you find a lot of value in this educational we are doing here at Admirals. Double day. Yeah. So today we will talk about Bollinger Bands. All right. Has anyone traded Bollinger Bands so far? Are you guys familiar with Bollinger Bands? Or is it the first time you guys hearing about Bollinger Bands? Not with any. Okay, Brian says not with any success. Okay, I feel you. I had the same experience at the very early stage on my trading career. Yes, I use them often. Okay, Julian is using often the bands. Sarka says confusing. We're going to make sure that today you're not going to be confused anymore. Hear about it, but never tried it. That's okay, Raquel. John said use them, but didn't know what I was doing or how they help. Okay, so guys, we will break down everything about this subject, and I will encourage you to try them on a demo account. Okay, if you haven't used them in your life so far, you can try them on the demo account. If you see that it's something can add value to your trading and you can implement them in your trading strategy, by all means, go for it. Okay, but first, learn what we're going to say today, and then try them on your own and see how do you see yourself fit with the Bollinger Band trading. Okay, now let's set up this one here. As you know, these webinars are for education purposes and information purposes only, and doesn't involve any personal advice. And all the examples I'm about to show you are from the, of course, from the current market conditions. Okay, so market conditions are changing, so just to make sure. Now, here at Admirals, for those you don't know yet, we are offering a variety of tradable instruments, not only for trading, but also for investing. We've been around for more than 20 years. We are very well established and we own multiple licenses from different countries, from Cyprus, from United Kingdom, FCA, Estonian, and the ASIC from Australia. We always make sure that our spread are kept to as minimal as possible for your own benefits when you are trading. Our programs and trading assets are tradable through MT5 and MT4 platforms. You can use the web version or you can download it also on your devices. Okay. And guys, please, before we proceed, make sure you give us a nice thumbs up on YouTube channel. I just noticed today that we are only 40 or 35 subscribes away to hit 30K, and that will be excited to see the number today go on 30. That will be great. So if you haven't subscribed and follow us on Facebook, please go and do it. And also, I personally would like to see likes on this webinar, and especially if you like it, of course, you can also share it with anyone you believe it's going to add value to their trading. Okay, so for myself, I assume that many of you know me because you see me every week now. My name is Theo. I've been an active investor and trader for the last 10 years. My investing approach, it's a long-term approach. Mainly, I'm focusing on tech stocks, automotive, and digital currencies. And when it comes to trading, after being a heavily active day trader, now because of the obligations of the work here with at Admirals, I'm a swing trader. Mainly, I will say 90% of my trading is swing trading and 10% is day trading. And I mainly focus on the 4-hour charts and with the analysis be done on the daily and weekly charts. Okay. So today's agenda, we have trading strategy using Bollinger Bands for trends and trading strategy for ranging markets. There are many people out there, all right, they are trading really, really well when the market is trending, either with moving averages or with support resistance, with the changing of the swings, also with the Bollinger Bands, of course. But when the market is shifting from trending to ranging, I see many of the traders, they just get lost, okay? Not only that, but unfortunately, they don't understand how to separate the ranging from the trending market. And that's where they start using this, they apply the same risk management rules, which I will encourage you to learn from me and use different risk on ranging markets, on trade, or if you are risking, let's say, 2% per trade on the, and that's your full size on the trending market. When the market goes into a range mode and you identify that it's a range mode, and I will definitely show you how to identify it, then I prefer if you just reduce your risk per trade, okay, your size. When the market is just drifting sideways in a small, tiny range, it's for sure we have to stay away from these markets, okay? Because consolidation, sometimes it's just taking, if you see the chart of gold today, as we explained it on the morning briefing, if you were around, you'll see that we talk about extensively the gold is trading, is between a very, very small, tiny range, which it's not actually tradable, okay, for most of us. So we're going to make sure, I'm going to make sure today that you will be very well aware about trending and ranging environments. Now, what are the benefits of trading with the Bollinger Bands? Well, and why many traders are using them? All right. First and foremost, are excellent trend filters. Bollinger Bands with trend, they are working very, very, very good. Okay. Also, we can define the price within the upper and the lower band in the ranging markets. Okay. And there is the band contraction with the volatility expansion in the market. And I will show you a few examples there as well. And of course, later we're going to go to the MT5 platform as we do in all the webinars. And then I will show you how to add them in your platform and how to implement it in your trade. Okay. So let's just go to the next slide. All right, so Bollinger Bands. Today, I'm not going to ask you if you can see my drawing. I will assume that everyone can see the drawing, okay? So I will take this on me. But if you want to confirm, that will be great. Now, Bollinger Bands are defined by two lines, which they are on the top and bottom, and one middle line, which it's a moving average. Thank you, Brian, for confirming. And this moving average, usually it's the 20 moving average, or they call it the deviation of 2. Guys, all these are pre-default setup. We don't need to worry. We just plot them on our chart and we let them work. Okay, so we see this market. That's, if I remember, that's the Euro USD. Okay, yeah, it is the Euro USD. We see this market putting a downtrend, and we can see this lower low, and we see that this impulse move is quite significant compared to this pullback here. Okay, so the market put this lower low, and over the sudden we see that buyers, they stepped in and they are coming towards the middle of the band. In the trending market, a good strategy to trade with Bollinger Bands is to wait for price to come in the middle of the band, in the 20 moving average, and then to execute. If you enter from here until this area here, it's a good risk reward position, so it allows you to benefit from this particular trade here. Now, this market opened with a significant gap. You see, it opens with this big gap. So I understand that for many of us, that wasn't a trade we could participate in. Okay, but the market, after a few sessions, pulled back with this nice pin bar, and guess where? Around the middle of the Bollinger Bands. So the downtrend, it's still intact, okay, with lower lows and lower highs, and we have a rejection of this area here. So the trending filter is suggesting that this market, it has moved to give to the downside. We see, and if I recall, this one, it's from the 4-hour chart, okay, and we see that the market stay for 1, 2, 3 sessions here, and then another pin bar here, which we can define it very well, rejected this area of the 20 moving average, and the market is pushing lower. Now, as the market is pushing lower, we can see that the lower band is keeping the price very close to it. The price, it doesn't deviate, it doesn't move away from the lower band like this bearish candle here. It's sticking around. That means that the volatility is not extreme. So at some extent, we expect the price to push back, to make a pullback before the resumption and the trend continuation. Okay, so we learned two things here so far. We learned that in a downtrend, a pullback to the middle of the band, which in this case is always the 20 moving average, it's a good tradable opportunity if applies rules you may have in place. Okay, so that's the one thing. The second thing is, if we see a nice rejection around this area, and what do I mean by nice rejection? An obvious rejection, like a pin bar or a bearish engulfing bar. Bearish engulfing bar is when the market, when the price is trying to push higher, opens here and close there. So imagine this is a white candle, open here, close there. And then the next session, it opens here the buyers, they stepped in, tried to push the price higher, but sellers, they say, no, that market has to move lower, and they close below the open of the previous candle. So imagine this candle, a red candle. And we say that this candle here engulfs the previous candle within its range from top to bottom, from high to low. So this is a bearish engulfing candle, and it shows a significant shift in the momentum of the market. That's why it gives us a very strong clue that the market has the willingness to move lower. Another strong price action is the pin bars, where in the pin bar, the price opens somewhere, in this case, a bearish pin bar. The buyers, they try to push the price higher. At this point here, the sellers, they say, no, we don't agree with that, and we defend this area aggressively. And within this period, within this 4-hour period, in this case of this 4-hour chart, so they push the price lower, and the candle end up closing nearby where it opens. So this rejection within the same time period, it's also a significant shift in momentum. So we can definitely open here, put our stop there, and let the trade work in our favor. However, if we combine a price action with the Bollinger Bands, that's where good strategy applies together. Okay, and that's how I trade them. I do combine them with the price action. Okay, so let's keep going. After this pin bar here, we can see that the market is pushing lower. Now, we said about the open, we said about where we put the stop, but we have to define also where do we want to close the trade and to make profit. Because, guys, I'm telling you, I saw many traders, and I met with many traders, and I also talked with many more traders. And many people, they have this weakness, allow me to say, to use that word weakness, to take their profits out of the trade. As humans, often we do have the tendency that if we enter here and okay, we have our stop there, that the trade, it's gonna give us an unlimited amount of pips, which translated into positive outcome. But at some point, because we are not the market makers, we are not the people who say the price, it will end up here. We have to understand and accept this. So we have to make some rules around it and say, hey, I make 1-to-1 on this trade, or I'm around this support here, last swings here. So I made 1-to-1, I will close the trade. Or my rules are, I risk 1 to make 2. So I risk this distance. I want to make double this distance. So somewhere here, I take my profits. That's a take profit area. And I'm happy with that. Everyone has to determine what is comfortable for them. Okay, if you don't know, you really have to try and see what works best for you. Okay, for me, what I aim on every single trade, if I do not have a room before the next obstacle to make at least 1-to-1, it's a very low probability trade. Because think about it in a bit logical term. If you open here, but you have a support, let's say here, and the price has to be defined around this area if it's going to give you profits or losses, then you kind of risk let's say 2% of your account, hypothetically talking, and on your best scenario, you're going to make 1.6% back. If you're going to lose, you're going to lose 2. If you're going to win, you're going to win 1.6. So that's not a high probability trade. Okay, we aim as traders to make at least 1-to-1 on every single trade. I know sometimes we have to move our stops to break even and so forth, but try to stick with the probabilities in your favor. Okay. Now let's move on. We see that price is pushing lower, and what can we see at this stage with the Bollinger Band? We see that the price cannot even reach the middle of the band. That reveals that this market, it's really strong. The sellers, they have so much willingness to push the price lower, and at every buying trial, they step in to save the position, to defend their areas. Okay, so this information, it's very important, and without the Bollinger Band, sometimes it's hard to understand how strong is the market. Although here the market breaks through the band and immediately is following through with a minor pullback, and it shows its willingness of the selling mode. All right, so we can use them, as I said, as filters, trend filters to enter. If you combine it with price action, it's the best. So you have accurate entries, and by plot them on the charts, you can identify if the market is trending strong, and you can make your own trading decisions as well around if you want. Okay. Now, let's see this uptrend and how to use the Bollinger Band in the uptrend. It's very similar with the downtrend. Okay, I will start from here. The market, it was coming down. We see it breaks out of the band. It means too much of volatility happening in this market. But when the price is pushing higher, the sellers try to step in, and at this low point here, the buyers, they put this bullish engulfing. This bullish engulfing with this double bottom formation, it signals that the buyers, they are willing to push this market at least higher than this level. Okay, and we see the buyers, they create these impulse moves finally, and we have this pullback here. What is happening around? We said that a good trading strategy with Bollinger Bands is to see what's happening around the middle of the band. Guys, remember, in trending markets only, the middle of the band, we use it as an entry point only when the market is in a clear trend, either uptrend or downtrend. When the market is going to move sideways, we do not use any of this stuff I'm describing now. Now I'm giving you a trending strategy. Okay. So the market pulls back here. Another bullish engulfing. This candle here has a lower low and a higher high, so it's a bullish engulfing candle. An entry could set up here. A stop could set up below this low point, and then the market, until it reaches the other band, it will give you more than 2-to-1 risk reward to risk. You can see this distance here, it's double than this whole distance here. Okay, so that's the entry, that's the stop, and that's the exit for taking profits. You can combine this with other factors of confluence, like we had this swing here before the impulse move. So from here to there, if you are using Fibonacci retracements, if you draw your Fibonacci, you will be around 61.8% and around this area, which can be used as support and can be viewed at the support zone. So you see a strong price action around Fibonacci and around the middle band, the middle of the band in a trending market. It's a good and solid signal to trade. Okay, now if you missed that one, the market gave you another opportunity with this pin bar here, rejected this middle band, and then you could enter here, you could have your stop there, say more than 2 to 1. We move forward, the market is coming here, volatility is not that much because we see that the candles, they don't expand and break outside of the bands. We have a pullback again to the middle of the band, pin bar here, rejecting the prices. You can enter, you can have your stop, your entry here, and you can make until it touches the other band, you can make easily another 2 to 1 on this trade. George Lewis is asking, do you buy on each yellow area? It's a potential buying area, but I do not just blindly set a limit order here to buy, because I want to wait for the market to pull back, and I want to wait to see, as a price action traders, we have to wait to see when the sellers, they are going to get defeated by the buyers. If this is an uptrend, this is a strong uptrend, the buyers, they want to buy at every dip. So how do we know that the buyers are here? We will see the price action. In 3 times, we saw a 3 strong price action. Bullish engulfing, pin bar, pin bar. So around this area, it's a valid signal to trade. Okay. Now, the market is making a higher high here. Is trying to break through the upper band, but volatility is not that much. So you see only wicks around here. So you can use this as resistance as well, and you can use this as support if you want. Okay, the market is pushing back to this middle, to the middle of the band. It's drifting around here. I don't see any price action, and the reason I marked you guys this area with yellow is to show you that not on every single pullback we can trade it if we are a price action trader. For myself, the price action must be very, very selective, and must be the type of price action signal that it's supported by other confluence around. So it increases the probability of a good trade. Okay. So for me, this wasn't a tradable signal, at least on this time frame. But this one here, it was a rejection, a pin bar rejection. So that was a tradable signal. That where the entry was, that where the stop could be. You can put your stop here, you can put your stop there, you can put your stop all the way down. Depends how are you trading, what's on your trading plan. Okay, so around this area here, a taking profit area was all right. And if you guys see, if you drop this line, it's kind of false breaking around this resistance. Okay, so as I just mentioned, the upper band as well can work in many occasions as resistance. And you're going to see it if you try to read the Bollinger Bands a little bit, you will see that they can be used as support and resistance as well. All right, I have a question here. Sarkar is asking, does the pin bar candle are those who have a body less than 50% regarding wick? In many, that's a very good question for those guys. You don't know what is a pin bar, because as I said, these webinars are educating as well on price action and reading the market. It's my opportunity to give you this valuable knowledge through these webinars, because let's be honest, during the morning sessions, we have to just go through the pairs so you can identify a little bit of trading opportunities maybe during the day, and the time it's so limited. But this webinar, because it gives us the opportunity to spend 50 minutes to an hour together, so I like to use that time as well to give you insights about price action and about how to effectively read the market, so you increases your probability on good trades. So a pin bar usually is let's use this one. Let's see if we can fill this one. Okay, let's do this. So let's go through the pin bars. All right, this we call a this we call a bullish pin bar. And this one we call a bearish. Now, as you maybe noticed in trading, there is nothing which it's like a textbook most of the time or all the time. These two here are the ideal and the perfect example of the bearish and the bullish pin bar. So to me, what is the textbook bearish and bullish pin bar? It's any type of rejection bar which it has the wick at least twice bigger than the whole body. I will repeat again, at least twice, 2 times the body. If it consists this rejection, this long tail, it's a well-defined pin bar. So the body is relatively very small, at least 2 times than the whole rejection. So it's a really strong indication of what the market is it's about to give next. And I will give you an important information based on my trading experience the last 10 years. Wherever you see a pin bar like this one here, this is a perfect pin bar, guys, a perfect. Can you all see this one here? This pin bar here. It has a very long shadow and tiny small body. But if you see a bearish pin bar on support, do never ever touch it. It's what we call a market misleading. Okay, the best pin bars are those who confirm the major trend in the market. The major trend here is up. Do never trust any pin bar that it's sitting on support. Okay, that's right, Luis. It's too dangerous here to try and sell this pin bar here because it's a bearish pin bar. Okay, and how do we identify the bullish or a bearish pin bar? It's simple. If it's rejecting the high, it means it's a bearish pin bar. If it rejects the low, it means it's a bullish pin bar. Okay. So let's move on to the next one. So for trending market, guys, you understand that we have the trend and we use the middle of the band to identify high probability trades. What's happening with the ranging market? And how do we know that the market is ranging? When we don't see anymore a series of lower lows and lower highs, or higher highs and higher lows, or lower highs and lower lows, when we don't see this example and we see the market is trying to push higher, then it's coming here, then buyers step in, try to push higher, then sellers, they push the market lower. So at this point here, we have to start being a bit cautious about the intention of the market, and most likely we're going to look to push higher from this support. Okay, sometimes it's going to just go until the middle, as we said many times, but sometimes it can just go all the way up. So this is what we call a range market, when the market is unable to sustain any pattern which it looks like this or like that. So let's clean the chart a bit. So we have this area. I'll not say about this one here because it's not very accurate, but I'm going to come to this area here. Okay, we see the market, it's going like this and it's coming here. The market just broke below and closed below this lower band. All right, we expect that in the next session the market can keep the momentum to the downside, but surprisingly we see a long shadow, very long shadow in relation to the body. So it's a signal of rejection of the lower prices. So this market most likely has the tendency to push higher, okay, because of two factors. I repeat, not only because of the rejection here, but also because the sellers from this massive bearish candle, they were unable to sustain closing on lower prices. Okay, we see a little bit of trial from the buyers to move the price higher, and then the sellers, they try to push lower, but buyers, they close higher here. So we can see this as a double bottom in the market because it didn't close lower. If the sellers, they were strong, guys, when they opened there, because that was a gap, they opened there. If the sellers, they were strong, they will close well below this point here, and everything will be dark blue here, not white. But the sellers, they couldn't push their market lower. So a double top around, a double bottom around this low here, around also this, the bottom of the band, it signals a good tradable opportunity to the upside. Okay, and as I said earlier, when I used to trade a lot with the Bollinger Bands, I was using the top band as a taking profit. If I was buying from the lower band, the top band was using as a take profit area. Okay. We continue and we are rejecting this upper band, but at the same time, we are on this resistance zone. So combine on ranging markets, if you combine the upper band with a resistance zone and a price action rejection, it's a good tradable opportunity. And that's exactly how do I trade them. I repeat, my trading strategy, and please note it down around this particular market condition, is I use the Bollinger Bands with a resistance zone and a price action rejection. And I don't hesitate to enter the trade. Okay. We see here that the market is trying to push higher for one more time, but what's happening? By now, I'm sure you recognize this as a price action, which shows shift in momentum. Can you please type what price action do you see here, guys? I just want to make sure that you understand what we said so far. Here on this red box here, you see a price action. Yeah, it's a resistance, correct. It's a bearish, yes. Can you please name? Brian said it very well. Sarvak, yes. Kenneth, yes. All right, yes, this is a range, but the actual price action we want to see at resistance and at the top Bollinger Band is this pin bar here. And when you see the pin bar, it's a valid trading opportunity. You could have entered the market here, you could have your stop here, you will be in a well one-to-one if you take profits there, or in ranging market, usually we have the tendency to take profits on the other side of the range. So if you enter here, you have your stop there, you could make this distance here. Okay, it will take you about 3-4 days because this is a 4-hour chart again. So you could hit your target in the next 3-4 days. Okay, let's move on. I will take this as an example now. The market is pushing lower with this bearish candle. The market is closing well outside of the lower band. It shows that sellers are very aggressive on this market. It shows that most likely we're going to experience a significant amount of volatility. And many people, they start selling after they see this. But what if you use the Bollinger Band to get a bit of more understanding about what's the tendency of the market is? What you will experience, which other people, other traders, they won't experience because they don't use the Bollinger Bands, you will see that we closed outside of the band, and that's perfect. But the next candle, it didn't follow through. It didn't follow through. So sellers, they are not here, obviously. And then one session after, we see sellers trying to push the price lower. Buyers, they stepped in right on the support, which we mentioned earlier, and they push the price higher within the same session. And what do they end up printing on this chart? A bullish pin bar. We see all this rejection here, and we see just a little bit of trading volume, the body is so small, so tiny. So if the sellers, they were very aggressive to continue these bearish candles here, we wouldn't see this rejection all the way. We will definitely see a follow through and break and push the market lower. So if you could enter here, you could have your stop there. Until this point here, you have a well to one to make on this trade with a bit of patience. Okay, so how do we use the Bollinger Bands to buy a market? First, I think I can create a text for you guys here. So what do I do first? First, I'm waiting to understand if the market is ranging, right? We tick that, we know we are in a range. So I draw a support if I want to buy. Second, I wait for price to come to the support, and most of the times this support, it's going to be along with the lower band. And third, I want to find a bullish engulfing or a bullish pin bar, and I'm ready to execute. I define my risk parameters and I execute the trade. That's how I use this. That's my list, if you want to call it a list. That's what I look, and then I execute in the market. Okay, if you want to write it down. And also exactly the opposite applies when I want to sell from the upper band. I look for, instead of support, of course, for resistance. Then instead of being at the lower band, we're going to be at top band. And then I'm looking for, instead of bullish engulfing, bearish engulfing. And instead of bullish pin bar, a bearish pin bar. So everything is the opposite. Okay, so let's just go through some questions to see if we have other questions. Sarvak is asking, in which time frame should we use? Lower time frames makes too many false signals. That's exactly very, very, very good you mentioned, Sarvak. So usually, guys, I'm using the Bollinger Bands on about the hourly chart. Rarely I'm using them on the 15-minute chart. When I trade the 15-minute charts, I use market structure and chart patterns only, because there are so many false signals on the prices, which is not possible to have the odds in your favor to trade price action on the lower time frames. And I'm telling you from huge experience, from enormous amount of time I spend in screening. Okay, trust me on that. I spend thousands of hours in front of the chart. On the lower time frames, I don't used to go and look for price action. I am looking for price action on the 4-hour charts and on the daily charts. Okay, and that's where I find the best of my trading profitability, to be honest. So it works with every time frame. Yes, Julian, it works with every time frame. But on the 15-minute charts, on the 30-minute chart, these price action signals I'm showing you here, many times they lead to be false signals. And I'm telling you to give you some knowledge ahead, so to, let's say, protect you from many trades which you should just scrap them and don't even look at them. Okay, price action, just try to stick on the 4-hour charts and on daily charts, which are stronger. So Brian said, this is awesome. I'm happy you enjoyed, Brian, because you can just try it and see if it works best for you. Bollinger Bands, it's one of the, Julius says, Bollinger Bands, it's one of the easiest and the best strategy. It is, Julian, it is one of the best and one of the simplest, I would say, trading strategies, because, and especially in the Forex market, they work well with the volatility. And if you guys try to be a bit focused and patient in your trading, you will see in many occasions that on the higher time frames, again, this is a 4-hour chart, okay, on the higher time frames, by the way, guys, we are left with about 5 to 7 minutes before the completion of this webinar. Is it okay with you if today I'm not going to go to charts to scroll through example, and I will just stay focused here and give you to make sure you understand how to trade if you want to trade, if you decide to trade the Bollinger Bands? Is it okay with you? So yes, of course, thank you so much. Now this is a 4-hour chart, okay, and if we are a bit patient with our trading, guys, we have the time, and that's why I like the higher time frames, because you have the time to think what exactly is happening in the market. When you are trading on the 15-minute charts and on the 5-minute chart, if you are watching 20 pairs, it's humanly impossible to make the best high probability decisions every 15 minutes by flipping 20 pairs all the time, because we need our time to understand the market structure. We need our time to understand the imbalance. Buyers are here, sellers are here. Is the market in an equilibrium mode? For example, let's take, I think this is a bit more clear example. Okay, guys, let's focus on this one here. So let's just get rid of this. Okay, so let's assume that we have no idea what's happening. Oh, a little bit more. Yep, perfect. Let's focus on this example. Let's change the count. So we see that this price action, it's a very strong indication of a selling force came in the market. If we see this on the 15-minute chart, we're not going to put so much significant on that, because it will just tell us that in this particular 15-minute, sellers are in control. But when sellers are in control, we want to sell, right? But where are we going to sell? We have to wait for higher prices so we can sell, and that will leave us with the room to go and retest at least the level of, at least this level here, which was the, when the sellers, they just stop selling before the pullback. However, on the 4-hour chart, this candle here reveals a 4-hour buying and selling activity, or a 4-hour tradable volume. That's what we call a selling activity, a buying and selling activity. It's the total volume we see in the market. And we can see that here, the sellers were in control. However, knowing that here we are approaching a support zone, what can we see? We can see how the price will react when we're going to approach this support. And when we see this massive bullish pin bar on this support and combining it with the lower band, unable to sustain for another 4 hours in lower prices after this break, it gives us a clue about this market that maybe, I say maybe because we never know what's going to happen. Maybe buyers, they're going to step in here and push the prices up to the top band. Okay, so it's worth in this market to put a buy order here and see if we want to end up being a winning trade. Okay, that's why I consider price action trading a valid price action with high probability outcome only on higher time frames, and that's the 4-hour charts, the daily and the weekly charts. All right, and if you want, you can go and see it yourself. Excuse me. If you are on the 15-minute chart and you see this bearish pin bar here, in many occasions, you will see the market just pushing higher and put another higher high and so on and so forth. And that's what we call many false signals. But when you see this structure on the 4-hour charts, on the daily chart, it has a high probability of this being a valid signal. Okay. So choose 3 pairs max and learn them a max. Yes, Julian, it's saying that instead of watching 20 pairs, you can choose 3 pairs and learn them a max, and that's great. That's how I start trading as well. But the only thing, the only challenge comes when these pairs, they don't give you opportunities to participate in the market. Then as human beings, we have the tendency to start looking to other pairs. That's where the confusion comes, and that's where we tend to mix the time frames, and we have to be understandable. We have to know ourselves when we're trading. Hi, where on YouTube or the internet will this webinar be uploaded? Please, thank you, Paddle. This webinar will be uploaded on our Admirals YouTube channels. If you guys go to Admirals, and if you, as I said before, if you haven't subscribed, please subscribe and please like the videos. This one, it's going to be uploaded. I don't know exactly which time, Paddle, but it will be for sure uploaded on our YouTube channel. Sarvat is asking, sir, from the chart, it looks like if we find a double top at upper band and sell and vice versa. Absolutely right. Absolutely right, Surab. Absolutely correct. Double top, here it's a double top. You find a double top, price action, rejection if you want, or the band, and you are good for sell, or double bottom for buys. Do you, Mihai is asking, how do you recognize a change of a trend? Is there a special indicator? I recognize, that's an excellent question. I recognize the change of the trend when the structure has been broken. That's exactly what I mean. We have a higher highs in an uptrend, a higher lows. We have a higher highs, a higher lows. If now we're going to see the market push lower, but this lower low, this lower high, it's unable to be rescued by the next buyers, and the market is keep pushing lower and it breaks the structure, I will wait for this pullback here. And if I see a price action rejection around the middle of this impulse move, which it make a lower low here, do you see the structure from higher low it make a lower low here, this one with this one. So I consider as a potential trend change. I will wait for a price action rejection somewhere here, and I will enter the market. But the confirmation comes from the fact that we're gonna break through this low with another low, and then that's where you have to participate. New lower low, change of structure. Okay. There is a term, walking the bands. Cheers. Yes, paddle, walking the bands. True. It's down theory. That's exactly, Luis. From down theory, we determine the market change with the swings. And Sarvak's asking, in higher highs and higher lows, do you consider candle closing or weak? Okay. That's an excellent question. Again, Sarvak, a week, it all the time depends. If I'm in a strong market, let's clean the chart a little. Okay, so Padel is asking, do you consider, for example, we see this higher high, do you consider a close above the high or just a wick is fine? It always depends. If we are in a strong uptrending market, even if I see a wick here, I will definitely consider it as a higher high because it's a strong uptrend. Buyers are there. But if the market is not as strong and I see this type of higher high, no, I'm not going to consider it as a valid higher high, just a wick here. I want to see a strong close. That's why it always depends how the impulse, the previous impulse move is, the number one, and two, how big is this pullback. The pullback, guys, determine how strong is the trend with the impulse, but also the pullback. If you see a small pullback, it means that in an uptrend, a small pullback, shallow pullback, indicates that sellers are not in control. So buyers, they step in very aggressively and very fast to rescue this market, to push it higher. Okay. Okay, so last question from Padel, is there a time to stay with the candles as the the bounce and keeps wanking upwards versus it bounces? Careless, sorry, Pat, isn't there a time to stay with the candles as the careless? Yes, look, the bands, they act as dynamic support or resistance because they change with the price. Okay, they change with the volatility, with the volume. So they are not accurate places on the screen. They are accurate prices. They are dynamic. They are moving. Okay, and just to sum up with the webinar, guys, just in a second, because it's very important for you to know as well how to add them in your screen. For those you don't know, you can go simply to insert, you go to indicators, you click trends, okay, insert, indicators, trend, Bollinger Bands. You can change the color if you want. By default, it's black color. You click OK, and you can see the bands in your screen. All right, you can play around and have a look. Okay, guys, so if you have any questions, please type them and I'm happy to answer them later, but unfortunately the time is over for today. Pader, if you please, you can also, guys, after we upload the video on YouTube, even if you want, please type your questions down, go through the video again, and I'm sure you're gonna add only value into your trading journey. Okay, some market structure, maybe we mentioned some price action, it's going to help your, even the Bollinger Bands itself. It was my pleasure to spend this 1 hour with you guys today. I hope you have a great evening. Happy trading day for tomorrow as well. And I will see you on Monday morning at 9:30 on the morning briefing. Thank you so much. Good night.